Hey everyone, welcome back to Corporate Decoder, the place where we decode the hidden stories within your favorite company's financials. Today we're diving deep into Texas Mineral Resources Corp.'s latest annual report, and get ready because this one is a wild ride with some serious financial rollercoaster moments and the kind of risks that keep CEOs up at night. Before we jump in, if you love getting straight insights from these complex filings and want to stay ahead of the curve, make sure you are subscribed. Also, we have a fantastic community Discord server linked in the description. It is the perfect place to discuss these reports and more. So, Texas Mineral Resources Corp, or TMRC as they're known, has just dropped their annual report for the year ending the 31st of August 2025. Now, this isn't your typical tech company report, this is the world of mining, and it is full of unique challenges and opportunities. Right off the bat, they highlight something crucial, and that is the assumption that the company will continue as a going concern. This phrase, while sounding very official, essentially means the auditors are saying there is a real question about whether the company can stay in business for at least the next year. They've got an accumulated deficit, which is jargon for a big pile of losses, of around $45.1 million. That is a serious number. Let's look at where they stand financially. As of the 31st of August 2025, their total cash was about $590,350. Now, this might sound like a lot, but keep in mind for a mining company that can disappear pretty fast. They also have accounts payable and accrued liabilities totaling around $125,400, which are basically their short-term bills. Now for the financials themselves, the balance sheet shows total assets around $1.16 million. On the other side, liabilities and shareholders' equity. Their shareholders' equity, which is essentially what the owners have in the company after debts, is about $1.04 million. But here is the kicker. Buried in the negative is that accumulated deficit we talked about, sitting at a hefty $45.1 million. Looking at their performance over the last couple of years on their statements of operations, the story is pretty clear for the year ending the 31st of August 2025. Their net loss was a significant $1.93 million. That is a big jump from the $833,000 loss in 2024. This means they are spending a lot more money than they are bringing in, and that is a red flag. A big chunk of this spending is exploration costs, which hit around $336,885 in 2025. That is money spent on digging around and seeing if there is anything valuable in the ground. General and administrative expenses were around $871,708 in 2025, covering things like salaries and legal fees. Let's check out the cash flow statement. Under operating activities, they used about $897,000 in cash in 2025. This is largely due to that net loss we just discussed. They also had some money come in from financing activities, around $1.098 million from issuing convertible debt and warrants, which is a way to raise cash, but often comes with future obligations and dilution. Speaking of debt, in February of 2025, they issued quite a bit of convertible debt and warrants. The principal amount on these notes was nearly $1.1 million. These notes didn't have interest but were convertible into stock. This is a common way for companies needing cash quickly to raise it, but it can dilute existing shareholders. The warrants, if exercised, also mean more shares can be issued, further diluting ownership. They recorded over $746,000 in interest expense related to these notes, largely due to the accounting for the warrants attached. Looking at their shareholder equity breakdown, you can see the impact of these financings. The common stock and paid in capital have increased significantly, but that accumulated deficit is still there, a constant reminder of past losses. They granted stock options too, as part of compensation, recognizing over $261,000 in stock-based compensation in 2025. Now, into the really spicy stuff, the risk factors. This section is like a company's confession of all the ways things could go very wrong. For Texas Mineral Resources Corp, a major theme is their investment in Round Top Mountain Development, LLC. They own a significant piece of it, about 18.7%, but they have to fund their share of the costs. And here is a big one: failure to fund cash calls. Whenever Round Top needs money for exploration or development, they issue what are called cash calls. If TMRC can't or chooses not to pay their share, their ownership gets diluted. This means their percentage ownership goes down. They've already had to do this, and their stake has dropped. They openly state they don't have enough cash to fund future calls and expect further dilution. This is a critical point for investors. This dilution also impacts their control. If their ownership in Round Top drops below 15%, some key decisions that used to require everyone's agreement will no longer need their approval. This means less say in how that project is run. Another point of concern is their reliance on an exclusion from the Investment Company Act of 1940. If they were to be classified as an investment company, it would severely limit their operations and require massive compliance efforts. They believe they fit the criteria related to owning mineral leases. But this is always a regulatory risk. Being misclassified could lead to serious legal and financial trouble. Remember that going concern statement. It's reiterated here. They have a history of losses, and their ability to continue operations hinges on getting more funding. With limited cash and ongoing expenses, this uncertainty is a significant risk. They project they only have enough cash to cover administrative costs through August 2026. The core of their business seems to be the Round Top project, which is all about rare earth elements. But they are very clear there is no guarantee they will find commercially exploitable mineral reserves. It sounds like they are in the very early stages, and mining is a high-risk business. Adding to that, there is no history of producing metals from this specific project. This means they are venturing into truly unknown territory where success is far from guaranteed. When we look at their liquidity and capital resources, it is clear they are in a tight spot financially. They used funds from debt financing in February 2025, but that came with warrants, as we saw. They mentioned they don't have enough cash to fund future cash calls for Round Top or even their own administrative expenses beyond August 2026. This is a massive red flag for their short-term survival. And for investors, the stock price volatility is a huge concern. The report mentions their common stock price can fluctuate wildly and the market for it is limited and sporadic. This makes it hard to sell shares and also harder to raise additional capital, because a low stock price means more dilution. They also admit their resources may not be enough to manage their current business, let alone any growth. This lack of resources is a recurring theme, directly impacting their ability to operate and potentially forcing them to scale back or cease operations. Let's revisit that going concern point because it is so important. The auditors are basically saying that the company's ability to stay in business for the next year is in serious doubt. They don't have enough cash. They have big losses, and their future depends heavily on their ability to get more money, which is not guaranteed. Interestingly, they are classified as a smaller reporting company and a non-accelerated filer. This means they are not subject to the same stringent reporting requirements as larger companies, which can sometimes provide less transparency. Looking at it all, Texas Mineral Resources Corp is in a very precarious financial position. On one hand, they are in the business of mining rare earth elements, which are crucial for modern technology and defense, and there is a global push for domestic supply. The Round Top project is their main focus. However, they are in the very early exploration stages with no guarantee of finding anything commercially viable. Their ownership in the project is being diluted because they can't fund their share of expenses. Their cash reserves are critically low, and they openly admit they might not be able to fund operations beyond August 2026. The company's survival seems to hinge on their ability to secure significant new funding, which is a tall order given their current financial health and the inherent risks of mining exploration. The story here is one of high risk, high reward potential, but with a very strong emphasis on the risk side right now. They are essentially betting the company on finding and developing valuable mineral deposits, but the immediate challenges of funding and existing dilution are major hurdles. It is a classic case of an exploration stage mining company facing enormous financial pressure. Alright, that is our breakdown of Texas Mineral Resources Corp. Its latest filing, what do you think about their chances of success and the risks involved? Are they playing a dangerous game, or is this a diamond in the rough? Drop your thoughts in the comments below if this analysis was valuable. Hitting that like button really helps us out, and subscribe for more deep dives like this, and don't forget to join our Discord community. The link is in the description. Thanks for watching, and we'll see you next time on Corporate Decoder.